Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks rise on hopes of more Chinese government support for the private sector. In the US, futures point to gains at the open after the President's Day holiday. US and Russian officials meet to discuss Ukraine, but without Kyiv at the table. Meanwhile, European leaders attempt to find a common voice in dealing with President Trump. Plus, Chancellor Olaf Scholz and Conservative frontrunner Friedrich Merz rule out working together after Sunday's vote. We have the latest on Germany's election. Happy Tuesday. European futures currently pointing a little lower, down by 0.1% after fresh record highs yesterday, powered by the defence stocks, lifted by expectations of more spending from European countries to support the defence space. Currently, though, European futures taking little profit, it seems. Some investors pointing lower by 0.1%. We'll see how that evolves, of course, as we lead up to the open at 8 a.m. UK time. FTSE 100 futures pointing lower by 0.1%. We have data out of the UK on the labour market later today, which we will break for you. CPI and inflation data, crucial, of course, for the Bank of England. That comes through on Wednesday. The benchmark 10-year currently yielding 4.51. Chris Waller of the Fed saying he's comfortable pausing at this point. He continues, of course, to watch the dynamics around inflation. And if inflation evolves, he says, as it did in 2024, there is still scope to cut rates later this year. The pound in focus, given the data that's coming at around 7 a.m. UK time, 125 right now in the pound, weaker by 0.2%. That is largely a dollar strength story. Brent at $75 a barrel. OPEC Plus again considering pushing back the increase in output beyond April, and gold at 2,911 per troy ounce, with Goldman Sachs suggesting you could get to 3,100 by year end. They have raised their forecast, Goldman Sachs, for the yellow metal, and part of that is down to concerns around tariffs and the move into the safe haven yellow metal. Let's flip the board and have a look at the Asian session. You're seeing a lift again for stocks, particularly in Hong Kong. The HS Tech Index putting in a very solid session, currently at 1.4%, on expectations that you may get more support from Xi Jinping and the government in Beijing, particularly for the private sector after that meeting yesterday that, of course, included Jack Ma of Alibaba. Broadly, across the regional benchmark, you're seeing gains of 0.1%. Over in Japan, the Nikkei up 0.4%, and the Aussie dollar in focus after the RBA cuts for the first time in 4 years to 4.1%, as expected. A 25 basis point cut coming through from the RBA. Now, US and Russian officials are meeting in Saudi Arabia today to discuss ways to end the war in Ukraine without any representatives from Kyiv. The talks come after a phone call last week between Presidents Trump and Putin. French President Emmanuel Macron, meanwhile, hosted fellow European leaders in Paris yesterday to discuss the EU's defence capacity as well as the war. The leaders did find some common ground.
There was agreement and unanimity that a significant increase in defense spending is absolutely necessary, and there is no need to get irritated if an American ally says, spend more, be stronger, and more resilient, because those words are definitely justified by facts.
OK, let's bring in Bloomberg's Greg Sullivan, who's been following this for us, with a focus, of course, on the talks that take place in Saudi Arabia today. Greg, what can we expect from the conversations between Russian and US officials in Riyadh?
Well, first of all, this is a lot about establishing communication. This is a major policy reversal from the Biden administration, which largely sought to isolate Russia and eschewed high-level contacts with them. There was very little communication between the Biden administration and Russia. And suddenly now you have face-to-face talks and potentially a leaders' summit. Of course, also we'll be looking for what comes of any potential leaders' summit. Can they arrange a meeting between Trump and Putin, which the U.S. has said they would like to do before the end of the month? And finally, people will also be watching closely what are the contours of any possible ceasefire agreement that Russia and the U.S. see as viable, and would that potentially work for Ukraine or others? So those are the main things that we're watching with this meeting coming today.
And Greg, we've been hearing from the German Chancellor Olaf Scholz making his views pretty clear in terms of Ukraine's absence from these peace negotiations. Let's take a listen.
Es ist völlig verfrüht und
It is completely premature and completely the wrong time to have this discussion now. I'm even a little irritated by these debates, I have to say. This is highly inappropriate, to put it bluntly and honestly.
So some pretty direct comments there, Greg, from the German Chancellor around these negotiations taking place in Saudi Arabia. What else have we been hearing from European leaders? Are you getting any sense, Greg, is the Trump administration open to listening to European concerns, to taking on board some of these concerns?
Well, I think you see a real worry among European leaders that the Trump administration just thinks they don't need them, that they can talk directly to Russia or others, and that Europe is not necessarily a player here. They're scrambling to formulate the response and figure out a way to convince the Trump administration that they need to be present in any dialogues on European security and that they deserve a place at the table. Now, of course, one particular sticking point, which we heard from Tusk earlier, is defense spending. Can Europe step up to the plate, help provide security guarantees for Ukraine, help provide for their own security? We know that Trump has been long critical of NATO spending among other NATO members, defense spending. So that's a real sticking point. But nonetheless, we have the sense that Europe is scrambling to formulate their response to a Trump administration they see moving quite rapidly.
Bloomberg editor Greg Sullivan, thank you very much indeed. The Europeans scrambling, the US and Russia set to meet in Riyadh later today. The Ukraine war, of course, is looming large as well over the German election campaign. And what a consequential campaign that is shaping up to be as Europe's biggest economy heads to the polls on Sunday. Defence policy has become a key dividing line between current Chancellor Olaf Scholz and frontrunner Friedrich Merz of the CDU. For more, let's cross over to Berlin and bring in Bloomberg's Arne Delfs with some of the latest. Arne, how do the two differ then? The two potential candidates, the two candidates for Chancellor, the current Chancellor and Friedrich Merz, of course, who wants to take that position after the vote on Sunday. How do they differ when it comes to the question of defence? How deep is this division?
Hi, good morning. Well, Olaf Scholz has always been, when it came to Ukraine, be reluctant, careful. His challenger Merz is much more assertive. He wanted to send Taurus missiles, for example, to Ukraine. Now, since the Munich Security Conference, they are pretty much on the same position, meaning they will continue military aid for Ukraine and also beef up defense. So, it's always like that. If you have a common enemy, if I want to put it in that way, you more or less unite. But definitely, Friedrich Merz is the one who would be more assertive on beefing up German defense.
There is an expectation, Arne, of course, that you know well, that we get a coalition on the back of this vote on Sunday. The shape of the coalition still remains a significant question, but it seems like Scholz and Merz have ruled out governing together. How significant is that? What do we read into those comments?
Actually, it's not a huge surprise because they're both running for the same job, and people expect if Scholz loses this election, which very much looks like it right now, he will probably leave the public stage. And both Merz and Scholz are not really getting along very well. Others in the SPD, in the Social Democratic Party, will move forward and probably then cooperate with Friedrich Merz.
OK, Bloomberg's Arne Delfs in Berlin on the impact of these discussions when it comes to Ukraine on those German elections, and apparently ruling out at least Merz and Olaf Scholz ruling together. No big surprise on that front. Later this hour, Jana Puglierin from the European Council on Foreign Relations will join us to discuss how Europe's security concerns are playing out ahead of Germany's election this weekend. Someone with deep experience of the defence space, particularly when it comes to Germany. We're going to bring you all the news and analysis, of course, market moves, as we continue to build up to the German elections this week, including a special programme when polls close on February the 23rd, live from Berlin. Now, European bonds slipped and shares in defence companies rallied yesterday on the likelihood of greater military spending. For more, let's bring in Bloomberg's Valerie Teitel, who, of course, is always across these markets for us. Will the gains continue, then, is a question, Val.
Yeah, it's the big question. 2025 continues to be the year for European stocks. We had yet another record close for the Euro Stoxx 50 index yesterday. It's second in 3 sessions. All of this driven by the optimism around defense spending, around those defense stocks. We flip on, just check about how Rheinmetall performed yesterday, because it closed very strongly, closed at the highs, up 14%, Tom. If we flip on, we also look at how this sector has performed year to date. My goodness, Rheinmetall is up over 50% this year. The broader defense industry is up some 22%. So industrials are really powering the next leg of this European stock rally.
Val, we also heard from Fed speakers Chris Waller talking about the inflation dynamics, talking about being comfortable about holding rates at these levels. What did you take away from Fed commentary? Does it change your expectations, like market expectations about where the Fed goes?
It was interesting to see his comments on why he's calling for Fed to go on pause, saying that he needs to see some more progress on inflation. It was interesting that he saw those January CPI figures that did come in hot, Tom. He called them mildly disappointing, but he viewed them with the view of skepticism, saying the Jan CPI figures for the last few months running have really misweighted the seasonal factors. So perhaps that jump in Jan CPI he is seeing purely as seasonal, not having any real big base effects that the Fed should be worried about. But still, he wants to see a bit more progress on inflation before the Fed cuts again. He did have an interesting note on tariffs. He again reiterated he does not see tariffs are inflationary. This is as the Treasury curve opens up a bit lower this morning, Tom, reopening after the holiday yesterday, very much following that European yield rise yesterday. We have those 10-year yields nearly 4 basis points higher this morning.
Very interesting. Chris Waller does not see tariffs as inflationary. Markets currently pricing in 38 basis points of cuts by the end of this year. Bloomberg's Valerie Teitel on the market adjustments. Thank you. Here's what else to be thinking about today then. 7 a.m. UK time, we're going to get labour market data. And you heard there from Valerie talking about Chris Waller critiquing, or at least putting a critical eye and lens to the inflation data we'll get out of the US. Well, there is some question marks about the validity of some of the UK data as well, of course. But nonetheless, we'll break that for you, give it a context at 7 a.m. 7:45 a.m. we're going to get inflation data out of France. Important, of course, as you think about the ECB's reaction function. And at 10 a.m. UK time, as we lead up to the German elections on Sunday, the German ZEW survey. Are we seeing any green roots in an economy, of course, has flatlined for the last 2 years. Now, you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to D8YB Go on the terminal. The rally in Chinese stocks linked to that support from Xi Jinping, and AI enthusiasm is front of page, as you can see. Coming up, Elon Musk, talking of AI, says the latest version of his XAI startup is, quote, the smartest AI on Earth. Is he right? We discuss how his claims measure up. That's next. This is Bloomberg. Plus, before I get to the break, the French payments and services platform Edenred reports say beat on like-for-like operating revenue. We're going to speak exclusively with the CEO of that company later this hour. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Elon Musk's artificial intelligence startup XAI has showed off its updated Grok 3 model. Technology that the billionaire says is, quote, the smartest AI on Earth. Matt Bloxham from Bloomberg Intelligence joins me now to assess whether or not that claim is true. How big, then, Matt, is this moment for the release? In terms of AI, in terms of moving things forward, has Grok done it? Has it moved the dial on the developments and innovations around AI?
Yeah, I mean, I think it's definitely moved the dial, but how much, we'll just have to wait and see. I mean, this is like very early stages. It was only launched within the last hour or two, and access to it is going to be limited initially to Premium Plus subscribers on the X platform, which is a $22 a month subscription. But certainly some of the claims they're making and the demonstration that they gave earlier is pretty impressive. Given his love of space, he asked Grok to plot a course for a rocket from Earth to Mars and back again. So kind of keeping things relevant to SpaceX there. And yeah, they're claiming that it matches and beats the other popular models like Claude and ChatGPT on a lot of kind of complex reasoning and calculation issues. So yeah, it's the next step forward.
Yeah, and as you say, we'll have to see whether independent assessments verify the claim that Musk is making, that it beats many of its competitors. Talking of which, of course, OpenAI is prominently amongst them. Does this put Sam Altman on the back foot to some extent? Is Sam Altman of OpenAI now playing catch up to Musk?
Yeah, a little bit, but I think this is a bit like a kind of multi-dimensional game of ping pong. You know, that somebody hits the ball, and then it's up to somebody else to kind of take things forward. And we've seen that recently with DeepSeek launching, and now we have Grok 3. There's a ChatGPT 5 in the pipes. I'm sure we're going to see further developments from Meta on Llama 2 and Google Gemini. So, you know, I think this isn't the kind of the definitive statement in the world of generative AI and these kind of chatbots. There's a lot more to come from all of Musk's competitors on this, very, very pivotal kind of software technology.
Okay, multi-dimensional ping pong. I like the characterization of that in terms of the developments we're seeing and innovations we're seeing within Gen AI. Matt Bloxham from Bloomberg Intelligence on the latest chatbot coming through, of course, from Musk and XAI and Grok 3. Now, some other stories making news this Tuesday. Bloomberg has learned, staying on the AI theme, a co-founder of OpenAI is raising more than $1 billion for his AI startup, a valuation of over $30 billion. The company, named Safe Superintelligence, is now amongst the world's most valuable tech companies. It's reported as well, switching focus to the car space, it's reported that Honda is willing to resume takeover talks if Nissan's CEO steps down. According to the Financial Times, Honda would be prepared to revive negotiations under a new Nissan boss who can better manage internal opposition. Now, at least 15 people have been injured after a Delta plane flipped and came to a rest upside down after landing in Toronto. The plane had flown in from Minneapolis with 76 passengers and 4 crew on board. According to local paramedic services, 3 passengers are in critical, non-life-threatening condition, while the other 12 sustained mild to moderate injuries. Southwest Airlines says it will cut more than 1,700 jobs in its leadership ranks, impacting 15% of corporate positions. They're the first layoffs in the US carrier's history. The cuts extend the upheaval that's gripped Southwest for much of the past year, including a battle with activist Elliott Investment Management, a board overhaul and significant operational changes. Coming up, we're going to hear from BHP CEO Mike Henry after the miner posted a 23% drop in first half profit on lower Chinese demand. That interview coming up next. This is Bloomberg.
So look, I'll start with the last half performance, which was another solid operational and financial performance for the company. Good cost control within the business and production firing on all cylinders right across the business. You look at our iron ore business with record shipments for the first half, notwithstanding some of the pressures in the iron ore market that you refer to. Production in our steelmaking coal business in Queensland up by 14%. And the real exciting story here is copper production up by 10%. And that keeps us on track for 24% growth in this very important critical mineral over a 3-year period to the end of this financial year. Now, what are we seeing by way of near-term commodity demand? Yes, there has been some overall economic challenges or headwinds in China, but the sectors of the economy that are important to BHP's commodity demand, for the most part, have been performing strongly. The exception, of course, is the property sector. That has been under some pressure, but we're starting to see some green shoots there by way of increased new starts, property price rises in some sectors. So I think we'll see some momentum building into 2026. And we also expect that with a pro-growth stance having been reiterated in China, that they will calibrate their policy measures to ensure that the domestic economy stays on track or continues to gain momentum. And they'll calibrate those measures based on what they're seeing in export markets, with there obviously being a heightened degree of uncertainty there currently given policy settings in some other jurisdictions.
What's your forecast and I guess your level of preparedness when it comes to tariffs, of course, on China, but also potentially global tariffs, threatened, expected, but not fully into play yet? How does that impact both demand side, but also across supply chains and broader operations?
So, great question. Obviously getting a lot of attention on the part of everybody in the markets currently as to where that ultimately lands. And the reality is that we don't know. It's going to be weeks or months before we know where tariffs and counter tariffs ultimately settle. Having said that, BHP is a business, given our strategy and our portfolio, that is positioned for all worlds, including a world of heightened uncertainty. We've got commodities that are not dependent on any individual thematic, so they're broad-based in terms of their demand, both by the markets that they sell into, as well as their end use. And within those commodities, we have assets that sit at the low end of the cost curve, which gives us more resilient margins than the competition. So we're a full 10 percentage points ahead of the competition when it comes to our average margins. So that places us very well for a period of heightened uncertainty. And given the growth optionality that we have in the business, if the global economy stays on track, it continues to grow, the world's going to need a lot more of the metals and minerals that BHP produces. And we're right at the forefront of our ability to meet that growing demand.
And that was BHP CEO Mike Henry speaking to Bloomberg's Heidi Strauss-Watts. Iron ore gaining after he talked about those green shoots in the Chinese housing market. Let's cross over right now to Martin Ritchie, who has a finger on the pulse, of course, of commodities, particularly with a lens on China. Martin, thanks for taking the time. What stood out to you then from what Mike Henry said? The CEO of BHP, in terms of the demand, particularly around iron ore, he was very bullish on copper, and then again seeing green roots in the housing market of China.
Yeah, I would say very cautious kind of optimism there. The iron ore market is obviously kind of cooling after many years of growth from China's industrialization and urbanization. We've seen steel production peak, and BHP has recognised that process is happening for many years. But yeah, he said he does see sort of demand growing from other sectors, from manufacturing, from infrastructure, which is offsetting some of the property malaise in China. So yeah, he said this year he sees the iron ore supply tightness sort of start to come back a little bit again, narrowing the surplus, which has really dragged in prices, but yet still pointing to that longer term, those pressures on iron ore from major new projects, including one by Rio Tinto in Africa. You've got China's slowdown in demand, increasing use of scrap. So there wasn't anything hugely new here. It's reiterating a kind of broad picture for BHP. They still make a lot of money from that steelmaking material. It's fine, but the good old days, the boom days are sort of behind us.
The boom days are behind us. Yeah, profit falling 23% and cutting their dividend. Martin, is there a broader read across to the mining sector from what we've heard from BHP?
Yeah, I think so. And look, this comes ahead of a fairly busy few days for mining earnings. We've got BHP today coming up later this week. Vale, Glencore, Rio Tinto, who I just mentioned, they're all reporting this week. And BHP slashed its interim dividend to the lowest in several years. And that's a sign that the miners, BHP and probably the miners more generally, are quite focused on capital allocation, going a bit more for growth probably over coming years rather than paying back to shareholders as they have over the past decade.
OK, Bloomberg's Martin Ritchie, thank you very much indeed on the BHP results and what it could mean signal for the rest of the miners as well ahead of those earnings. Coming up, Europe's security weighs on Germany's election ahead of this weekend's vote. We're going to discuss the challenges ahead with Jana Puglierin, Senior Policy Fellow at the European Council on Foreign Relations. That's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks rise on hopes of more Chinese government support for the private sector. In the US, futures point to gains at the open after the President's Day holiday. US and Russian officials meet to discuss Ukraine, but without Kyiv at the table. We discuss what one top diplomat calls the existential threat facing the European continent. Plus, Chancellor Olaf Scholz and Conservative frontrunner Friedrich Merz rule out working together after Sunday's election in Germany. Let's check in on the markets then. After another record for European stocks yesterday, powered by defence and gains and expectations that European countries will have to step up their spending on defence. Currently, European futures are essentially flat. FTSE 100 futures as we await data on the labour market that drops at 7 a.m. UK time, pointing just modestly lower by about 0.1% at 8,735. S&P futures pointing to gains, as we said, after the President's Day holiday yesterday, looking to add 0.2%. NASDAQ 100 futures looking to add 70 points, up 0.3%. Let's split the board and look cross-asset. We've been hearing from Fed Chair, of course, or Fed Governor, I should say, Chris Waller, member of the Fed board, suggesting he's pretty comfortable with rates as they are, though he does see the door still open for additional cuts later this year if inflation evolves as it did last year. 450 right now being yielded on the US benchmark 10-year. Yields are up 3 basis points. The pound in focus ahead of that data that drops, of course, at 7 a.m. 125 on the pound, down 0.2%. Brent holding on to gains, currently up 0.3% as OPEC Plus considers pushing back additional barrels onto the market past April. And gold, Goldman Sachs raising the target for gold to 3,100 per troy ounce by the end of this year. Currently, the yellow metal up 0.6% on the session. Let's briefly check in on the Asian markets. It was a hawkish cut from the RBA. Yes, cutting rates for the first time in 4 years, but the Aussie dollar is largely unchanged, given some hawkish commentary after that decision. The broader benchmark is currently flat across the Asian region. HS Tech still posting gains of 1.3% on optimism around technology and potentially additional support from Beijing. And Nikkei over in Japan, currently up 96 points, up 0.2%. Now, US and Russian officials are meeting in Saudi Arabia today to discuss ways to end the war in Ukraine without any representatives from Kyiv. This comes after France's President Macron hastily convened a mini-summit in Paris with several European leaders to discuss the conflict and possible ways to boost the continent's defence spending. I'm joined now by Jana, who is Senior Policy Fellow at the European Council on Foreign Relations and someone with deep expertise on the defence space, particularly through the lens of Germany as well. Jana, thanks for your time. Is Europe going to meet this moment?
I have heard a lot of, this is a wake-up call, this is the hour of Europe again during the Munich Security Conference. And honestly, I'm very tired of that. I was hoping that we see more results coming out of yesterday's meeting. In the end, I think it became clear that Europeans are still not on the same page when it comes to what is the threat and what needs to be done.
Is Russia exploiting that division? Is the US exploiting that division within Europe?
There is an interesting new connection. You know, during the Munich Security Conference, American Vice President Vance gave that speech, that very special speech, that I think rang a bell with, or struck the tone with a lot of right-wing populists all over Europe. We've seen a new alliance emerging between the right-wing AfD in Germany and the Trump administration. And I think what they have in common is their detest of the EU as an institution, of the bureaucracy, and they have that in common with Vladimir Putin as well. So from a European perspective, it feels very much as if Europe was under attack and as if the kind of disruptive forces from within Europe were fueled from the outside.
Yeah, Tina Fordham telling me yesterday that the Munich Security Conference is now a byword, I'm quoting from Tina Fordham, a byword for the abandonment of the transatlantic relationship. You talk about the Vice President, J.D. Vance. Let's take a listen to some of what he had to say in that speech, and then we'll come back to you, Jana.
I worry the most about vis-a-vis Europe is not Russia, it's not China, it's not any other external actor. And what I worry about is the threat from within. the retreat of Europe from some of its most fundamental values, values shared with the United States of America.
Jana, the threat from within is a term often used by autocrats, of course. What do you make of the comments by the Vice President J.D. Vance, and whether or not this is actually going to prove catalytic and a catalyst to Europe to finally get that cohesion and finally get the defence spending that Europe needs?
So not everybody in Europe, I think, was so negative about the comments that Vice President gave. Look at Viktor Orban in Hungary and other forces. I already mentioned the AfD. So I think there is a reason why President Macron yesterday in Paris just gathered a couple of European countries. I think the EU at 27 at this point in time is not able to act collectively. It's not a unified voice, especially because of many of the issues that Vice President Vance addressed during his speech. Those are issues that are fueling a cultural war in Europe, but that a cultural war that already existed over here as well. So we are in the same situation.
Yeah. Jana, do you therefore expect that there is going to be no agreement around joint debt to fund defence? Or are we moving closer to that? Is that still a possibility? Or is it going to be individual European nations having to step up themselves?
So I am hoping for something like the Next Gen EU on an EU level, because I think that would be the most powerful instrument. However, I think what's currently debated is more an outside instrument, outside of the EU budget, because there is no agreement amongst the EU 27, something that would also include possibly the UK and Norway.
What should security guarantees for Ukraine look like? Should we have boots on the ground?
So I think we need something that really deters Russia. And many in Europe are convinced that the only thing that really deters Russia would be American troops, or at least the guarantee that America was with us if European troops get attacked in Ukraine, or if Putin basically tests our resolve. However, that doesn't seem to be very likely. I listened very closely to what Secretary of Defense Hegseth had said in Brussels. No Article 5, no NATO mission, no American boots on the ground. But many Europeans have made their own contributions to such a troop force in Ukraine, conditional to American support. So I think we are in a trap here.
How do you think the German elections, Jana, changes the dynamic?
Actually, I would say less than one would hope or think. For example, yesterday, Chancellor candidate Merz from the Conservatives basically echoed what Chancellor Scholz had already said. So now is not the moment to debate boots on the ground. We need to discuss all sorts of things first. And while this may be true, I think Germany needs to prepare for such a situation. What I also find striking is that the Chancellor candidate Merz was not really open to defense spending above 2%, or at least at the Munich Security Conference, he said this needs to be a decision taken amongst all the NATO members. And he has a point. I mean, Germany will have problems to meet even the 2% target after 2028, once our special fund that we issued in 2022 runs out.
Jana, what is the gap that we're talking about in terms of the spend that is needed for Europe to deal and have its own defence capabilities without that US support? What is the time frame in terms of getting that to a point where we can adequately defend our borders from Russian aggression without US support?
I think it is hard to say at the moment, because all the regional plans that we've discussed within NATO and all our capability targets are still based on the assumption that American troops and American capabilities will stay in Europe. We have not heard anything concrete when it comes to troop withdrawals from the United States, but I think this is to be expected. So I think Europeans need to expect that they need to pay even more than they thought. I think the 2% goal is a thing of the past. I think we need to move towards 3 or 3.5%. Some European countries are there. Some European countries are still far away, like, for example, Italy or Spain.
OK, Jana Puglierin, Senior Policy Fellow at the European Council on Foreign Relations, with that assessment and analysis, of course, of the challenges facing Europe in the current geopolitical context. Jana, we appreciate your insights. Thank you. We're going to bring you, of course, all the news and analysis and market moves as we continue to build up to the German elections, including a special programme when polls close on February the 23rd, live from Berlin. Now, at the top of the hour, we're going to get the latest official read on the UK labour market after Bank of England Governor Andrew Bailey warned that the economy remains static despite a recent upside surprise for growth. For more, I'm joined, of course, by our UK correspondent Lizzie Burden. Lizzie, will the numbers that we get on jobs out of the UK at 7 a.m. move the dial for the Bank of England?
Well, remember, Tom, these numbers have been the bane of policymakers' lives, not least because of how unreliable that labour force survey has become, partly because of Ring doorbells, because people just aren't answering the door when statisticians want to know the latest on their jobs data. But look, our economists say that a hot pay print is not going to move the needle for the BOE, not stop it from easing more, given the weakness in the economy. Because remember, at the February meeting, the Bank of England already revised up its fourth quarter forecast for pay growth to 6.3%. And as you say, we heard from Andrew Bailey in an interview yesterday, really pouring cold water over those surprisingly strong growth figures for the fourth quarter. I say surprisingly strong, it was 0.1%, but it's not a recession, so we can celebrate that. But look, Bailey seeming to kind of echo Catherine Mann, who turned from arch-hawk to arch-dove on the Monetary Policy Committee in his concern about the growth outlook, even if he says he didn't get to the same conclusion that they needed to go for a jumbo 50 basis point cut. So even though we are expecting this tick up in average weekly earnings, actually it's not likely to knock the BOE off this cadence of gradual, careful cuts.
Yeah, the Bloomberg economics team see an additional 3 cuts through this year, don't they? In terms of what all this means for the broader economy, for the government and its spending priorities, there is potentially further pain ahead. I mean, the Prime Minister is talking about additional defence spending. Is that taking money from other departments?
Yeah, well, it looks like it might do. We'd already had the reporting that the Treasury had been asking departments that don't have protected budgets to look at cutting their budgets so it'd be flat cash. So it would be nominally the same, but in real terms about a 5% cut. They were also looking at 11% cuts as a worst-case scenario. Now, coming back to your last conversation, because of this need to spend more on defence, because of the US push to Europe, actually that worst case scenario is looking more like a base case scenario, and actually the defence argument could be a cover for what many would see as austerity. So it really speaks to the difficulty that Rachel Reeves is in terms of the fiscal constraints as we head towards that spending review in March. But also there's been another blow to Rachel Reeves because the Supreme Court has refused to let the Treasury intervene in this landmark court case on car financing. Now, I bring this up, you're smiling because I know that you know that this is important, Tom. It's a blow to her growth agenda. It also knocked some of the bank stocks yesterday. So you saw Lloyd shares down about 4% at one point yesterday. So this is a major thing, not just for the Treasury, but for consumers and for banks as well.
OK. Lizzie Burden, thank you very much indeed. Tying in, of course, the car financing challenges as well for Rachel Reeves with the Supreme Court ruling, as you say, impacting the bank stocks. And we continue to watch some of those movers, potential movers, on the back of that news as well. Lizzie Burden, our UK correspondent, of course. Now, the UK Supreme Court, as we said, has made that decision, and Rachel Reeves will respond, no doubt. And we'll see how the Treasury responds to that, and the Chancellor, of course. Coming up, the French payments and services platform reports a miss. This is Edenred on like-for-like full-year operating revenue. We're going to speak exclusively to the CEO of that company, Bertrand Dumazy. That is next. This is Bloomberg. Welcome back. Happy Tuesday. Now, Edenred has reported like-for-like full-year operating revenue that missed average analyst estimates. The French payments and services platform still sees 2025 organic EBITDA of at least 10%. Very pleased to say, joining us now is the CEO of that company, Bertrand Dumazy. Bertrand, good morning. Thank you for joining us. Your reaction to the results and how it positions the business going through the rest of 2025.
Good morning, Tom. In fact, we are very pleased by our results because, in fact, we are above consensus. And when you look at the growth of Edenred being, the leading digital services platform around the world for benefits and engagement and mobility, we posted in 2024 another record year, i.e. our total revenue has increased by 12% and our earnings per share has increased by 21%. So in fact, to the contrary of what you wrote, we beat the consensus for the year 2024. Then when we look at our expectations for 2025, thanks to the good momentum we have on our activities, we bet, and it's our commitment, on, in fact, growth of the EBITDA like-for-like in 2025 of more than 10%. So we are very pleased by the 2024 results, the momentum we have, and the perspectives we have for 2025.
Bertrand, what gets you? What's your level of confidence on that full year 2025 EBITDA target of above 10%? And what gets you to that level?
Of course, there are some headwinds. The headwind number one is the economic uncertainty in Europe for the reasons you know. But having said that, Edenred is everywhere around the world. So if there are some economic uncertainties in Europe, we can say that Latin America is doing well, the US are doing well, and Asia is doing well as well. So first of all, our level of confidence is coming from the fact that our activities are really worldwide activities. The second thing is when we look at the momentum we have on our core meal and food activities, but also all the other elements we propose to our clients in terms of additional digital services, whether in benefits and engagement, but also in mobility, thanks to the momentum we have, we are confident for 2025. Then there is a last thing. If things do not go as well as expected in Europe in terms of top line, we have a strong operating leverage. We are a platform serving 60 million users, and so we are able to modulate our level of spendings. So we enter 2025 being cautiously confident. It means that if things do not go as well as expected on the top line, we know that we can play with our level of expenses. So the level of expenses and investments will grow in 2025 for Edenred, but it's going to depend to meet the 10% EBITDA like-for-like target.
And the political uncertainty continues in France. The budget, of course, has been passed, but there are serious challenges for the government going forward. What is the accounting for the tax increase that is coming through as a result of that budget for companies like yours? How much of a tax burden increase will that be for Edenred?
In fact, it's going to be moderate. Why? Because our activities are worldwide and France represents only 14% of our total revenue. So the impact of the tax increases, and everybody, all the citizens and companies need to make an effort to allow the government to have a budget that is moving towards the right direction. So we will make the effort, but due to the characteristics of our activities, the impact is going to be limited, and it's absolutely manageable by Edenred.
Bertrand, the US is a big market for you and the team. What are you seeing in that market, and how concerned are you about a potential trade war between the US and the European Union?
Yes, the American market is the number one market in the world because it's the number one economy in the world, and it's going to be like that for very long years. We are not afraid because we are very local. We are not a manufacturing company, so it's not as if we were importing goods to produce things or we were importing, services. In fact, everything that we deliver has been developed in the local countries. So directly thinking about tariffs, we are not concerned about that. The only thing we are concerned about that is if the liberal democracies around the world do not find, a consensus on the way to go forward, it could have an impact on the GDP growth, country per country. So we are much more concerned by, let's say, the second level of impact than the first level.
Okay, Bertrand Dumazy, CEO of Edenred, thank you for your time. With Edenred reporting full-year EBITDA of 1.27 billion euros, above the estimates of 1.25 billion. We appreciate your time and response to the earnings. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. The focus, of course, remains on the geopolitics, the meeting between Russian and US officials taking place today in Riyadh without, of course, Ukraine or Europe at the table. We continue to monitor and the European response. It was the European response and expectations of stepped up spending on defence that led to that rally yesterday. Fresh record highs for European stocks by the end of the close, and the defence space playing a huge role in that, with some of those stocks double-digit gains coming through for some of the builders of the defence technology that is expected to be needed increasingly urgently as the US pulls back. European futures are currently flat. We'll see how that evolves, of course, as we lead up to the open. FTSE 100 futures, we're awaiting data in terms of the labour market here, also currently flat. S&P futures, US coming back after the holiday of yesterday, currently looking to pretty decent gains of between 0.3 and 0.4%. Let's flip the board and have a look at Fed speak and the gauges around inflation, because Chris Waller of the Federal Reserve speaking yesterday saying that if inflation evolves this year in the similar manner to where it evolved in 2024, then he does still see the door open to additional cuts at some point later this year. But for now, Chris Waller is comfortable with rates on hold. And this is how inflation expectations are starting to evolve in the US. Let's flip the board and have a look at what is happening in terms of the expectations around UK pay growth. We know the data is mixed and muddied. Lizzie Burden, our UK correspondent, is going to break down the details for us in the next couple of minutes. But watch this and see how it ties into expectations around the Bank of England. You are still expecting additional cuts coming through from the central bank, potentially 55 basis points. That is the broad base case. Bloomberg Economics think they'll go further than that. We have inflation data on Wednesday as well. You tie in the labour data and the inflation data, and by the end of this week, we should have a clearer picture as to how far the Bank of England can go in an economy that is looking increasingly stagflationary. I believe we have one more board to check. If we don't, then we're going to lead up to the opening trade. We're going to break the data for you. It drops at 7 a.m. UK time, of course, and we keep an eye on the developments in Riyadh with that consequential meeting and the European response to it. The opening trade is up next. Stay with us. This is Bloomberg.